So, good afternoon, all. So, thank you very much for joining this special session on technical analysis, future, and options. I welcome all of you for this session, which is being conducted today. I'll be talking about the market overview and winning strategies. As you see, the technical analysis and future options is quite a broad topic. Even if you spend 1 month, 2 months, it's not enough. And we have just 1 hour. So I will be touching some of the important topic. It may happen that if you do not have any experience with the technical analysis or basics of the market, some of the things may go overhead, but that's okay. Yeah. But at least you will be getting familiar with some of the most important concepts and ideas in the future and options. So this is the online interactive session. I request all of you to put your laptops and mobile phones on the mute mode. I know you must have a lot of questions about the technical analysis, future and options. I will take all the questions at the end of the session. So please hold on till that time. Okay. So let me set with the context of why we need a technical analysis, future and option. But before that, we must understand why the stock market. So technical analysis, future option, these are the extended part of the stock market. But the first questions before us is the why stock market. As you see, I was going through one report and found that in the last years, financial years 2021, India made a record of the opening the demat account. Just in a 1 years, 1 crore demat accounts were opened. It is the record for India. Earlier 5 years, we used to get almost 50 lakh accounts in a 5 years, but in 1 year, getting so much accounts is really surprising. So there are so many people, including the men and women, joining the stock market. And if you see the distribution of the men and women, in fact, women are more. And if you see the age-wise, mainly the population between 20 and 25, they are more. So you can see the population not only from the big cities, even the small towns, and even some villages. So there is a widespread attention toward the stock market. So why I just want to answer, and of course, you have also witnessed the benefits of the stock market. Okay. Now, if you see the history of the stock market for the last 40 years in India, because India got the first stock exchange in 1979, it got operational. Okay, and if you see how stock market has performed in the last 40 years, and when you compare the investment with other popular investment like a bank deposit and gold. Okay. So let's say in 1979, you have invested rupees 10,000 in the stock market. In the bank, okay, you could have earned 2,68,000. If you had invested in the gold, 10,000 rupees would have turned into the 4 lakh. But if somebody has invested wisely in the stock market, just rupees 10,000 in 1979, it could have turned into the 45 lakhs. So stock market historically has given a huge return. So 10,000 turning into the 45 lakhs, but that is also average return. It's the return of the Sensex or return of the Nifty. Okay. So when you go for a specific stocks, again you will be surprised how much return a one company stock can give you. Okay. So I have taken this data from the Google. You can also search this report on the Google. So it is nothing new. Okay. So if you see the last 20 years record, there are at least 54 stocks that have multiplied over 100 times. 100 times means it is a 10,000%. So 1 lakh turned into the 1 crores just in 20. Okay. But there are again some specific companies which has really surprised the investors. Okay. Some stock rallied over 1 lakh percentage. So that means if you have invested 1 lakhs 20 years before, that is in year 2000, it could have turned into the 10 crores. There are such companies like Symphony, this is the air cooler company, and that turned 1 lakh into the 17 crores. Okay. BKT tires, this is the tire manufacturers, again 1 lakh turned into the 15 crores. Bajaj Finserv, 12 crores. And if you are a fan of Infosys, this has given a return of 20 crores in just 27 years. Okay. So 1 lakh in 1993, somebody invested. Maybe 1 lakh is not a big amount in 1993 compared to the 1979. But look at the returns some of the stock has given. So that is the magic of some of the companies in the stock market. So now question comes, okay, so how to select this stock? How to win in the stock market? So stock market revolves around the three things. Okay. What to buy? So there are about 5,000 stocks. If you go with the Nifty, there are 2,000 stock. BSE, there are 5,000 stocks. If you see the active stock, it will be about 3,000 stocks. So out selecting just 10 stock out of the 3,000 stock. Okay. So that require expertise. When to buy? People know when to buy. Whenever the market is up, people are buying. Some people are buying at the end of the trend. Okay. But many times people forget exit. Okay. They know when to join, but they do not know when to exit. And that is where majority of the losses happens. So market goes up, again market comes down, again market goes up, and then person is trapped into that cycle of the market. Okay. So stock market is all about three things. It looks easy, but when you actually do that, it is going to be uh, it's a job of expert. Okay. So let me touch with some of the aspect of the stock market. So first is the fundamental analysis, and when you see the fundamental analysis, you must know what is the government policies, how is our economy doing, whether GDP is growing or not, okay, how is the inflation in the country. All these factors, economical factors, really help to boost the market. When any foreign country, especially the investors from the Europe and America, see that India is fastest growing economy, it really attracts the attention of the foreign portfolio investors. They invest into our market and the market boost, market goes up. That exactly happens during the Corona time. It was the foreign portfolio investors who came heavily in the India market, and though there was a fear of the Corona, market really went up. Okay. So that is the one thing. So you must be aware of such economical factors in the country. Second is the industry. So there are so many sectors and industries in the market. Let's say pharmaceutical industries. The during the Corona time, the stocks of the pharmaceutical industry went up. Metal sectors is there, auto sectors. So there are so many things you must know that which sector is performing now. And even if there are so many sectors, not all the sectors will perform equally well same times. So there are always two, three sectors which outperform the market because of the certain benefits they are getting from the government, or because of the market condition, because of the export of that specific items to the other countries. And the most important thing is the company. So you must study the company finances, their balance sheets, their profit and loss. Also know who are the management of the companies. So all these factors really help us to select the profitable stock. So that is the first filters whenever you want to enter into the stock market. So out of the 3,000 stocks, you must have some list of maybe screen list of the stocks, about 100 or 150 stocks which are very good on the fundamental side. So you should also look not only the fundamental side but also the technical side of the stock. Now here I want to give one example. Let's say Lawson and Toubro and Reliance both are very good companies. Okay? But when it comes to the technical aspect of the stock, Lawson and Toubro did not perform well in the last 3-4 years, and even during the Corona times, uh, it has given the good return. But when you compare with other companies, returns are not so high. So I have shown here one example. I think this is from the April to August time frame. Uh, Many companies were performing, but L&T, I mean, just given the return of 10% in the 4 months, but at the same time, company like Reliance, which has given a return of 100%. The stock, which was at 900, it went to the 1800 in 4 months. So, considering fundamental analysis, yes, it's important, but one should not stop here. Any company fundamentally strong doesn't mean that it is technically sound. So you should always look into the both factors. One is a fundamentally strong company. At the same time, this company should give the higher returns. So next aspect, which everybody puzzled, is when to enter or when to exit. Okay. So this is where the technical analysis comes into play. And when you see the technical analysis, it is nothing but the study of price movement. The prices are moving up, prices are moving down, prices sometimes go sideways, and that is the nature of the market. So one should not worry because this is a natural behavior of the stock market. It goes up, it comes down. But if you get a sense based on such a study, based on the technical analysis, you can definitely identify when you have to enter in the stock and when you have to exit from the stock. Okay. And technical analysis is also quite broad subject. Okay. So whenever you are entering the stocks, we should always look for a triple confirmation. So sometimes people just rely on the tips. Somebody has told you that you should buy this stock, but thing is that you yourself should be aware. You yourself should be confident that stock is really great. So you should always go with the data. Data. It could be about price data, including what is the high, what is the low, open, close prices, some build up like open interest buildup, which I will show you later. You should also study the chart. You get a lot of insight from the chart. And definitely, you should also look for the technical indicators. But many times we go with a certain things only. We go for a chart or we go with the data. We do not look into other aspects. So this is a typical scientific way and the approach to be successful in the stock market. So if you get confirmation on all the three levels, then only you should enter. But if you are getting confirmation just on the data level or chart levels, one should avoid the stocks. So as those people who are already in the stock market, you might be aware that the trend is very important. And to find the trends, people are using normal chart, that is a line chart. And there are limitation of the line chart in the sense that you don't get a lot of insight, you don't get a lot of the decision making points in the line chart. But if you are using the candlestick chart, you get a lot of insight. So as you see the history of the candlestick chart, they were first used in Japan in 1600 century. So the farmers were using it for getting the prices of the rice. So they were using for the trading rice, and the candlestick chart today becomes so popular in the stock market. If somebody has to work in the stock market, they rely only on the candlestick chart. Okay. And you get a lot of insight. You get a green candles, you get a red candles, and every candle has some information hidden inside, which I will show you. Okay. Similarly, price volume analysis is also equally important. If the prices are moving up, prices are going up from let's say 100 rupees to 200 rupees, so it doesn't happen automatically. It must be supported by the volume. Volume is nothing but the investors or traders who are buying the stocks. If there is not enough volume and the prices are moving up, it means something wrong happening. It is not the real rise in the prices. It may be some kind of a manipulation of the prices. So all this study will help you through price volume analysis. So in the technical analysis, there are many topics. One of the important aspect in the technical analysis is the support, resistance, and the trend. Okay. Now, you must always study the support and resistance. It is possible if you are using the charts. Let's say the chart, the prices are moving up, and there is the one point the prices doesn't move up. Okay. Again come down, again try to move up. And so this becomes some kind of a psychological barrier to the stocks. And this is called the resistance. And this is where some people really take the advantage of the swing. So they will start from one point, they will go to this point of the resistance and then start selling. Okay. But some people just keep watching whether it will go up, but it doesn't go up, and then again come to the normal point. So you made a profit, again you made a loss. Okay. So the effect is neutral. Okay. Similarly, you should also watch for the support. Support is the place where prices are not going down. So it is like a foundation of the house. And if support is broken, then definitely there is something wrong may happens with the stocks. Stock prices may go down further. So this is the first stage we have to look into whenever you want to buy the stock. Where is the resistance? Where is the support? Once you are able to identify, you get many clues whether you want to enter into stock or wait for some times and let it break the resistance so that you can then make a conscious decision to enter into the stock. Another important thing you should always look into the stock market is the trends. Okay. So finding the trend is not always easy. Sometimes you get a very clear trend, like stock prices are moving up and up and up. It's a very clear trend. Okay. But sometimes the stock prices are going a very haphazard way. They are going sideways and you are confused. So you are not able to identify the trend. So you should always follow the trend. If there is a strong trend and if you enter into the trend, then definitely you can make good money. You can get a good returns. But if it is a turbulent water and there is no clear trend and sometimes people just enters, so there is a high chances of losses. So another important aspect in the technical analysis is the chart patterns. Okay. So whenever the stocks are moving, they have specific behaviors. Every chart demonstrate different behaviors and no stocks will continue to move up. So there is sometimes when there is a break, stocks will stop moving and it may then show another direction. So when stocks are moving up, it form a specific patterns. Just for information, I have put different patterns. So this is not just all the patterns, but there are some more patterns. Like if stock is moving up, it can form double top, it can form head and shoulders, it can form triple top or falling wedge, triangles. So there are many types of patterns, and if you know what pattern is formed, and based on the patterns, you can make certain decisions whether you should continue or whether you should exit from the stock. Or you can also take the reverse direction. Okay. So these are the patterns which will definitely help you, and you have to study all these chart patterns very well so that you can make the decision on your own. So we have seen the candlestick chart. So candlestick charts became quite popular in the stock market. But if you see the individual candles, it also gives a lot of information. And there are different candlestick patterns like engulfing, then there is a tweezers, dozis, hammers, shooting stars, harami candles. Lot of patterns are there. And if you know which type of candle is formed at what place, and if you enter at that times, definitely chances of success is very high. And you can see a lot of books on the candlestick patterns. It's a very big books, 300, 400 pages books just on the candlestick pattern. So they develop some kind of science through the art of reading the candlestick chart. Okay. Of course, there are some sentimental impacts which we cannot rule out in the stock market, because stock market is not a pure science. It is also impacted heavily by the sentiments. But science form the base. Okay. On that basis, again the sentiments will play some role. So you have to study the candlestick patterns during the technical analysis. So then there are technical indicators. So whenever you are taking the decision whether you want to buy or exit, technical indicators always prove helpful to you. There are at least 20-25 technical indicators, but some of the technical indicators are very widely used. They are simple and quite powerful. Uh, let's say the relative strength indicator, that is RSI, which is quite commonly used in the stock market. You can also use moving average, conversion, divergence, moving average crossovers, Bollinger Bands. Okay, so these are the some of the very popular indicators, and you need not to have more indicators because it always confuse. And if you become the master of 2-3 indicators, that is good enough. But if somebody want to study all this 20 technical indicators and then they produce contradictory results, it's very difficult. So there is always suggestion and recommendations to focus maybe 2 or 3 indicators. That is good enough. So another questions people are asking, how long one should stay in the market. Some people are very target oriented. They think that if I get 10%, I will just exit. Some people are saying 20%, some people are saying 60%, and some people say no, I will not exit till I find something negative in the market. Now, this is the place, this is a very clean chart of the JSW steel, and look at the trend. It's a very clear trend. And if somebody says, I want to just get a profit of 10%, when the market is going up, why to take the profit of 10%? Let's continue. And just 4 months time, I think July to September, just 3 months, this stock has given the return of almost 40%. Okay. So you know that stock has the energy, let it continue, and when it lose the energy, when it lose the momentum, definitely exit out. Okay. So instead of setting just target of 10%, you should see how the movement of the stock happening, and if it is a very positive movement, stay. Okay. So that is the principle you should use rather than the fixed formula. And you should rotate every time stocks. There is always some stocks which is in the uprising modes. So when that stock has lost the energy, just exit it and join another stock. So instead of getting average 10 to 15% return annual basis, you can turn your returns maybe about 50%, 60%. Okay. So that's possible if you rotate your capital wisely and identify the stocks which has uptrend. Okay. Okay. Now coming to the future and options. So that was the technical analysis part of the stock market. Now we'll move to the future and option. Future and option is also called the derivatives. Okay. So what is the derivatives? First we will understand. Let's take the example of the milk. Milk is the original product, and from the milk you get a cheese, you get a butters, you get a curd, you get a buttermilk. Okay. The same theory applies to the future and option. So here let's take the case of the Reliance. So Reliance has a stocks. So that is the underlying asset. That is the main product. And from the stock, you get a derivatives. Derivatives means the product which is derived from the main product. So what are the derivatives? You get a Reliance futures, you get Reliance options, and within the option also there are call option, put option. So that is how the future and options are derived from the main product. Yeah. So what is the difference between the stock market and the future and option? So stock market is also known by equity market or cash market. So once you understand the difference, then you will appreciate the future and options. Let me show you some example. Okay. Now, so this is, let's say, ABC company. The market is bullish. Bullish means stock prices are going up. Now you will buy at one point and you will sell at another point. So maybe you will be making return of 50% here. But do you get similar trend every time? Do you get a bullish market every time? No, that's not possible. That's not the nature of the market. So just after the corona impact gone last years around April, the market was very much bullish and it remained bullish for the next 5 6 months. But what happens when market is falling? Just before the corona, okay, April 2020 till March end, the market was falling. So as an investor, what you would have done? Many people lost the money in this market when market was, but there were many people. Okay, there were some people who made lot of money in the falling market. Okay. So that is possible if you know the future and options. If it is a bullish market, you can buy first and sell later. But if it is a bearish market, you can sell the futures, you can sell the options, and then buy it. And whenever the market is falling, it falls very fast. It falls very quickly. So that is the when there is a bad time in the market, but some people with the knowledge of the future and options, this become a great time for them and they enter into market and they take the advantage of the fear in the market and makes a lot of money which people are making in the 1 year they can make in the 1 month time. Okay. So that is the power of the future and options. And you can use the future and option, of course, in the bullish market. You can use the future and option in bearish market. Whereas in the normal stock market, you cannot play with this bearish market except intraday. Okay. Intraday, there is a facility, but the rest of the times you cannot do that. So that is how the future and options are helping some people to make a lot of money. Okay. So let me explain you what is the FNO. Okay. Future and option is also called FNO. So basically it's a contract. Okay. Let's say you are a buyer. There is one engineers who want to buy a flat and there is a sellers who is a builders. So what they discuss that I want a flat at rupees 50 lakhs. The flat is under construction. So builder says I will give you delivery after 6 months, but you have to pay advance of rupees 5 lakh. Okay. The contract is signed. So this is similar to the FNO. This is similar to the FNO. Now during that 6 months, what may happen if there is a boom in the reality, the properties, the instead of 50 lakhs, the price of the flat may goes to the 60 lakhs. That's possible. Or there is some many bad news, price of the flat may goes to the 40 lakhs. Okay. So if the price is going up and you pay just the 5 lakh advance, so builder has to sell you the flat at 50 lakh because that is the contract we signed. And within the 6 months, you can make a profit of 10 lakh. Okay. Now, whether you want to hold this flat or whether you can sell it to somebody. So exactly same thing happens in the future and options. Okay. So you are not paying the entire amount, but you are paying a very small amount. That is like a margin, that is like a premium you are paying. And based on that, you are buying a flat of 50 lakh. And if the prices rises, definitely you can make the money. If prices fall down, you can lose the money. So in the cash market, let's say you want to buy the Reliance shares, share price is rupees 2000 and you have to, let's say you are buying 250 shares. So total value of the shares is 5 lakh. So in the stock market, you have to get a capital of 5 lakh and you have to pay 5 lakh rupees upfront. So that's a huge amount. 5 lakh is not an easy thing for everybody. Okay. But if you are in the FNO market, future and option market, so here you have to buy a lot. So they are talking about a lot. You cannot buy a one share of the Reliance. No. The lot is of 250 size. And if you see the total value of the contract will be 5 lakh. But instead of 5 lakh, you need to pay just a margin of 1 lakh. Okay. So just margin of 1 lakh, you are getting the futures of worth almost 5 lakh. Okay. So that is called the leverage. Even if you have a just small amount, but you can buy the great value futures or options through the leverage. Okay. So that is the first principle you have to follow. That is the leverage. So that is called the margin you have to pay. Okay. Okay. And how much profit you make. Okay. Let's say if you are in the stock market and the prices of the Reliance has moved from 2000 to 2100, that is a 5% rise. Okay. So how much profit you will make in the stock market? Like it is 25,000, you will make the profit, but you invested 5 lakhs, so the profit percent will be just 5%. But if you are in F&O market, okay, let's say you are in the future market, you have just invested 1 lakh because that is the margin you paid, and you made a profit of 25,000. 25,000, you will be earning at 25% because of the leverage. Okay, but it may also cause you the loss of same amount. So there is a higher profit possibility, there is a higher loss possibility also. But even if you have a small capitals, you can make a large profit in the future market. Okay. Now, when it comes to the future versus option, so yes, there is a difference between the futures and options. So in the future, again, you are buying a future of Reliance at 2000. You are buying a one lot, that is 250 shares, and the lot size varies as per the stocks. Now, if you are buying a lot of Tata Motors, you have to get about 5,700 shares. If you want to buy one lot of Infosys, you have to buy about 600 shares. So you cannot buy a shares of your own quantity. That is not possible in the future and option market. So there is a fixed lot. One lot means this much amount of shares, depending on the price of the shares, depending on the volatility. There are so many factors which comes into play. So in the futures, you are paying a 1 lakh rupees margin, that is almost okay 20%, okay, of the total value. And as I said earlier, the stock moved from 2000 to 2100, so you are getting a profit of 25%. So everything happens in a linear way. If the prices of the stock moves, future prices also moves, but mostly in the linear ways, doesn't change. But in the case of option, that doesn't happen that way. So in the option, if you buy a call is at, let's say, uh, I will say it's a strike price. Okay, so there are different strike price of the Reliance. Some people may think the Reliance price may go to 2,200, some may say 2,500, some may say 1,800, and you are buying that strike price. And that strike price, and then there is a premium associated with. So premium varies depending on the strike price, depending on the volatility. There are so many factors. Let's say you are buying the Reliance call at 40 rupees. You are paying a premium of 40 rupees per share. So total value will be again 5 lakh. But here, if you see the premium just 40 rupees and 250, you are paying just 10,000 rupees. So in the futures, you have to pay huge margin, whereas in the option, you have to pay the just 10,000. And if the prices of the Reliance moves just 2000 to 2100, in a short times, your profit can be 150%. And what will be lost if something goes wrong? You will lose all this premium of 10,000. So that's why if you see the future market or option market, it is 10 times bigger than the stock market. The turnover in the stock market, daily turnover in the stock market is about 70,000 crores, whereas the daily turnover in the future and option market is 14 lakh crores. So because of the movement it is showing, because of the profit, and even with a less amount you can make a lot of profit. Okay, but that's not always true. There are many people who make a lot of loss in the future and option. Okay, so there are call options. You can buy the call when the prices are moving up, where there is no limit to the profit, unlimited profit you can enjoy. Okay, and there is a limited loss, that is the premium what you are going to pay. At the same times, if you are selling the call, that is called the call writing, okay, where you get a very limited profit, but there is a, sorry, it's the unlimited loss you will incur, okay. But there is always buyers, there is always sellers who get into the contract, because this is a contract between the two peoples, two traders, okay. And there is a put side. So when market is falling, that is where you can buy the put. So that is not possible in the regular market, where you can say you can buy something which will give you returns when market is falling. But that is possible through put, where you can also enjoy unlimited profit. That exactly happened during the corona times. The market fell from 12,000 to 8,000, and people were having the unlimited profit. I mean, huge profit people made. Okay, and if market had turned up, but there was quite surety because of the corona effect, there was a lot of fear in the market, there was a very less chance to move market up, okay. But of course, after a few months market really turned up, okay. And there is a sell put, you can also write the put when market is going up. So these are some of the tactics you have to follow in the put and call options, okay. So if you see the stock prices are quite straightforward, but option prices are not, okay. So option prices depend on the so many things, like what is the market price, what is the strike price, open interest, time to expiry, volatility, interest rate. So it's not going to be easy. Some people think that market is rising up, they buy the call, but instead of making the profit, they lose the money because of the volatility in the market, because of the there are so many factors which come into play. So their calculations is not straightforward, their calculation is not linear. So this is what we have to understand, the impact of all these factors and make the decision. But unfortunately, those new peoples who hurriedly enter in the market, they have seen that their colleagues have made a lot of money in the short times, and they fail to understand there are so many factors which impact the prices of the option. So this is the biggest mistake people are making in the future and option market. And there are many people who lost 50,000, 1 crores, and they got into this future and option market, and they did not know the impact of these factors. So unless and until you study this factor wisely, you should not make the decision of buying whether call or buying put. Okay. So there are so many elements. It's not easy to understand each and everything in a short time, but just I'm highlighting here. Like there is option chain analysis, which will help to know what are the strike prices of the Nifty, what is the premium you have to pay, uh, what is the open interest. So these are many things you have to study. Okay, so this requires a specialized study for the option chain analysis. Then there is the open interest. Open interest is nothing but these are the contracts which are outstanding. So you can find out based on the open interest whether people are building the positions on the call side or whether they are building the position on the lower side, on the put side. Okay. So this clearly shows now this is the latest chart of the Nifty, and I am seeing that the people are still hoping that 15,000 will be the point where Nifty can touch. So this is the call side, and some people are hoping that Nifty will not fall below 14,400. Okay. So this gives a very good idea as what should be the range of Nifty, because these are the sentiments, these are the contract people have signed. So this clearly indicates the market can lie here in this area. Okay. So you get some upfront information and you can visualize what may happen in the market. Okay. So it is not guaranteed that it is going to happen, but most of the times happen based on the sentiments of the peoples on which side they are buying, on the call side or put side. So this is where open interest study helps you. Okay. It's not also easy to understand in a short time all these fundamentals and the concept. Then you have to also study where the buildup is happening. Buildup means where the prices are going up, where the contracts are going up, and accordingly you can say whether it's a long build up, short coverings, long unwinding. If you are watching the TVs, you will commonly hear such terms. Okay, and this is also require a specialized study of understanding how this work. Okay, okay. So many times people enter into the naked calls. Naked call means they don't hedge it. Okay. So naked call definitely give you very high profit, but possibility of the success is less, hardly 40%. But if you go for a hedging, this is where the strategies come into play. So there are so many option strategies. Some of the strategies are quite popular, like bull call spread, bear put spread, straddles, strangles, butterfly, iron condors. There are so many strategies. Unless and until you study the strategies, it's very difficult to survive in the option market. Otherwise, there is a high chances of losing the money. Although the market shows a great potential to make the money, but majority of people lose the money because they don't understand which strategy to use and when to use. So whenever there is a budget, the market swings very high. Market moves maybe 300 points, 400 points one day. And if you do not know which strategy to use, and if you go with a normal way, you are going to definitely lose the money. Okay, because market change happens so quick. But if you are going for a strategy like strangle or straddles, you can definitely make the money because you do not know in which direction market will turn. If the budget is positive or budget is negative, accordingly market can move up or market can move down. So market can go in both direction. You cannot predict. So in that stage, if you have a specific strategies like a strangle or straddles, the chances of success are very high. So there is a big books, so much informations and write-ups on the option strategies on the internet, but this requires a lot of practice. So if you see the options, this is not a straightforward. These calculations are not easy. So you have to use some advanced options tools which will help you to analyze the options, which will help you to get the pairing of the options. You can see what will be my profit, what will be my loss. And these are all paid tools in the market, but these are really worth. If you use it, it will help you to save your times and improve your decision making. Okay. So this was all about stock market, technical analysis, future and option. Let me touch the behavioral part of the stock market. This is the most important but most neglected part in the future and option and stock market because everybody is so hurry in the making of the profit, but they become the target of the losses. Now, as you know, how many people are winners and how many people are the losers in the stock market. Some of you might be knowing that. The fact is that in the stock market, 80% people lose the money, more than 80%, I would say. Okay, and just 20% people make the money. But still, there are so many people who are get attracted in the stock market because they hope that they make the money, but they lose the money. And the biggest reason for losing the money is these three things. Okay, they lack the knowledge, they lack the skills, they lack the experience. So they think that stock market is like putting the money into banks, but stock market or future and option market is totally different. Okay, so we can compare the stock market as a ocean because in the ocean sometimes you will find a very calm, sometimes you will find the still waters, turbulent waters, and if you are able to swim in the such kind of a waters, then you can survive. Otherwise, you should not dare to uh, enter into ocean and swim there. It's not everybody's job. You should better swim into the swimming tank or rivers. Okay, so that is the nature of the stock market. Okay, and if you see the scope of the stock market, if you see the learning in the stock market, there are so many things to learn in the stock market. So if somebody is expecting that I want to become a master in 1 year, no, it's not possible. You have to go for a serious study. You have to experience it, practice it, and spend maybe 1 or 2 years It doesn't mean that after completing the training you cannot do. You can do that, but slowly you have to build up your skill. You have to get the momentum, and then that is possible to survive in the market, and you can make the money. And another important thing is there should be some guide. If there is no guide, definitely you are bound to make more mistakes. You are bound to take longer times. And since there are so many things you have to learn, and if you do not know what which direction you should go, uh, it is not going to help you. Okay. So the winning strategy, I mean, that is the winning strategy we are always recommending, and that is what I always tell to the people that yes. So yes, stock market is a very good place, but unfortunately, people are misguided. People just enters in the name of the profit, and they become the losers. So one should first invest in the building the knowledge and skills. Now, in the stock market language, if somebody is making the loss of 50,000, and if you are reducing this loss to the 10,000, even if it is loss, it is called as a profit. So if you are able to reduce your profit with the help of the knowledge and skills, that makes a big difference. Okay. So do not expect that you will be making the profit always. But even if you make a loss, and that is a very small loss, that you shall also celebrate. Instead of making a loss of 50,000, you made a loss of 10,000. You still saved a loss of 40,000. So consider this as a profit. Okay. Given the success and failure rate in the stock market. So the first thing, always go with this, and then definitely you can use this as a life skill, because once you learn, I mean, you are going to use this skill till you are alive in this earth. Okay. So to build up these skills, that is the initiative we started. How we can build the skills, how we can build the knowledge. We always start with the stock market crash course. So this is a 1 month course. We started on 1st of April. Okay. So before entering into the technical analysis, future and options, okay, especially future and option, one must have the basic knowledge of the stock market. Otherwise, uh, it will be difficult for somebody to get the hold of future and option, because there are a lot of calculation, lot of concept. Unless and until you understand that concept, you cannot go forward. And so this is an important step, that if you have some basic knowledge of the stock market, fundamentals of the stock markets are clear, then you should think of the and future and options. Okay. Or some people may directly go for the integrated foundation and advanced course, which is a combination of the stock market crash course and the technical analysis. So what you are going to study? Okay. So in the technical analysis, you have to study. Let me summarize, and I will just repeat. Okay. You will be studying the support, resistance, trend lines, breakout, price volume, various indicators, higher close, stock selection, volatility, all these things related to the technical analysis. Okay, and then future and options, there are a lot of things you have to study, like derivative markets, future data analysis, option chain, long build-up, ITM, ATM, option buying, selling, profit loss, pricing, how to decide the pricing, option chain analysis. There are different strategies you have to study. Then you have to also use the advanced tools. You have to study that softwares, okay, and also get experience in the live market. So this technical analysis and future and option course is the combination of two courses. One is the technical analysis, other is the future and option. Because to enter in the future and option, you must have a sound base of the technical analysis. And to enter into the stock market, you must have very good knowledge of the fundamental analysis. So those, so these are the people from the different places, including the Dubai, Mumbai, Indore, Bangalore, Pune, Hyderabad, Chennai. Okay, so they attended my previous classes, and they are from the different backgrounds. Some are teachers, engineers, directors in the IT companies, vice presidents, scientists. Okay, and I'm always in touch with them. They are also sending me the feedback. They are also appreciating what they have learned. Okay. So, so we are getting a very good feedback on what they have learned because we focus on the so many things which definitely build the skill, not just the information. So we are different from others because in the market you will see there are courses which are recorded and then just they sell the recorded courses, but our courses will be totally live and interactive. Okay, this will be like a classroom. Of course, we are not sitting in the actual classroom, but it will give the experience of the classroom. That is more important. And these classes are conducted by me, uh, and I got over 10 years of the stock market experience, and I have been dealing with so many strategies in the market. You'll also get exposure to the live market because just learning the theory is not enough. Okay. And we have the convenient times because there are working professionals. They are working from home now. Sometimes they go to the office. So we have considered the challenges. So we have set a new timing like 9 p.m. to 10:30. So the classes happen in the evening times. Okay. And we have also very limited students, not so many students which we cannot support. And we are ensuring the continuous support because just learning is not enough unless and until you get a continuous support, you will not succeed in the market. Yeah. So we do not charge just for the fee. Okay, we call it as a journey fee because it's not the course we are teaching and just leaving you alone. I'm ensuring the ongoing support. So if somebody has a queries, if somebody has difficulties, so that is where it's my responsibility to coach you, guide you. Okay. And monthly basis, we have also planned to conduct knowledge sharing or experience sharing sessions. Okay. So there is a journey fee, and journey fee is as long as we are there. This is what I want to ensure. Okay, that you'll be getting continuous knowledge, experience, and support. Okay. So normal fee of this course used to be 13,000. Now we are getting into the special price of 8,800. That is a technical analysis, future and options, 1 month course plus all this support. Okay. So this is a May batch. So that is going to start around 25th April because there will be always transition from the crash course to the advanced course. So this is the advanced course. So around 25th April, the new batch will start and the timing will be 9 to 10:30 p.m. And we have classes 4 days a week. That is Monday, Tuesday, Wednesday, and Thursday. Okay. And if anybody is interested, please send me the WhatsApp message or call me. Okay. And we'll see how I can help you. Okay. So the presentation part is over. I tried to provide you the overview because the subject technical analysis future option is quite fast. It's not possible to give the justice to this subject in 1 hour. So I just try to touch some of the important points. Very much for joining this session. Hope you got a good overview of what's happening in the stock market, future and option, technical analysis, and what's the importance of all these sub things. Okay. So thanks. Okay.
Thank you.
Thank
Thank
you.
you.
Thank
Bye.
you. Thanks.